In today's show, we're going to have a look at two very important charts that I'm personally focusing on, which may be really telling as to where price is going to go next and may have actually provided us with the much needed reset that we need to see within the crypto markets. So stay tuned until the very, very end of the show. Smash the like button, hit the bell notification, and subscribe to the channel. We can get straight into the show content. You are seeing on the hourly banter bubbles, at least, looking completely green over there, which you would think would be good, right? Optimistic in the market or optimism within the market. But of course, this is coming off of what was a pretty strong drawdown over the last couple of days. And yesterday, I would say, was the closest point to what we've reached in terms of the sentiment being fearful, right? And we may have seen a reset in that sector. I also want to have a look at the technicals and the yearly open, which we'll focus on as well. These are the two major points that I want to focus on for today's show. Red across the board on the weekly, even seeing a lot of the coins that are actually in the top 100. Let's just quickly go over there to the top 100, which are red on the monthly scale, which means there are a lot of people who bought in December, which are feeling it. They're feeling the pain. They have experienced a lot of drawdown over there. So we'll talk about what you can expect next in today's show. Again, guys, smash the like button. Well, the first thing that I do want to mention over here is this chart over here with all these little asterisk signs that are all over the chart. And this is your stop and reversal indicator on the weekly time frame. And I mentioned yesterday, we definitely don't want to see price breach or break below last week's candle low. You wanted to see that hold as the low. Breaking that drastically increases the probability that now you may continue your journey down towards the next major levels of support, which are most notably going to be situated around the $85,000 levels. Now, there's implications to this. It creates a little bit of a no trade zone over here, right? Why is it a no trade zone? Well, according to this chart over here, the fact that you've broken the stop and reversal indicator and it's now popped overhead means that that is going to be future resistance. And it means exactly that, a stop and reversal, the potential reversal of a trend. But we do, of course, have major support, which is situated below, but price is sitting over here and your resistance is overhead, which means you're situated right in the middle of that trading range. So for investors or longer term market participants who are looking for, long-term buy and hold strategies, this is essentially a no trade zone for you. And according to this chart, you'd be waiting for one of two things. Point number one, you're waiting to see when it hits these key levels, how does it react and is support held in that zone? So theoretically, you wouldn't be adding any new capital into the market at this point in time. You're simply waiting for A, the lower levels to be hit, or for B, signs of strength to come into the market, at which point you'd probably only get long once again when you do break above the range highs over there, which are coming in, of course, at about $104,000, $105,000 region. That is going to be your high time frame resistance. The good news is that you do still have the 21 exponential moving average up sloping. It's angled towards the upside. It's continuing the trajectory towards the upside. And think of this as a major momentum line, right? Momentum, inertia. If there's a train coming towards you and you even threw a brick wall in front of it, inertia would smash through that wall and you would have continuation, which according to this would suggest then the bull market is still intact, right? It is still a bull run. Of course, we're just entering into more risky territory where you could threaten that, right? That brick wall, when hit, will of course slow the momentum of the train down, and then the train has the possibility of actually wiping off of the tracks, and that compromises your bull market. But that is not a concern yet. We take it one step at a time. There's our white arrow. We've been focused on that for quite some time, so I'm going to delete that. That is at least chess piece one taken, right? There you go. It's been taken by the opposition over there, which is the bears, right? So what do we have still in favor of the bulls, and where are things going? Speaking about the steam train analogy and the momentum and inertia, well, of course, you do have a massive fair value gap situated over here on the monthly scale, right? And we've seen how this has reacted previously. That was your last, at least, fair value gap, which is a big inefficiency candle. Anytime you see a large abnormal candle that's larger than the prior candles, like this one was over here, it tells you there's an inefficiency in the market. Market makers like to rebalance the market by sending price back into those key zones. And that's pretty much what you saw over here, right? Price took a while to get back into that zone, but eventually it came back into there, dropping down to $49,000, filling that gap, still closing as a strong monthly candle, getting all the way back up to about $58,000. So pretty much about a $10,000 candle from wick low to where the close was. And then we saw the continuation up, right? Now we're looking at something similar. There is large confluence, remember, between $78,000, which is going to be your daily confluence. Maybe I'll just go straight to that chart and show you right now what that looks like. That is based on your 50% level, which lines up, of course, with the 200 MA and EMA. So on your monthly scale, that is your daily confluence. And then you have the mid-level of the fair value gap, which is coming in at 82,000, and just slightly above that at $85,000 is the next area of interest, which is, of course, going to be your 0.382 fib, right? Now, people that trade off Fibonacci's will utilize the 0.382 level coming in at $85,000 as the bull fib, right? That's where the bulls take control typically, and they always defend price and look to hold that particular level, right? So that is one area of interest that you're looking at, which simply means on the monthly scale, you may still get one more bullish reset in the zone that presents the last and final buying opportunity that you could probably make in this bull market. I would discourage people following this next dip. So if you do see something like that, if you do see price dropping into the zone over here and you fill this gap over here, wherever that may go, right? That is, in at least my humble opinion, the final buy opportunity. It would not be wise to allocate any more capital into the crypto market beyond this point, right? So, and that's assuming you hold it, right? Technical analysis is weighing up the pros and cons, the probabilities, and analyzing, prior areas of support and resistance. It's not 100% certainty that you actually hold that as support. Of course, you could just drop that over there, put in a complacency bounce later on, and the bull market is over. But I think that the chances of that is low, and we'll talk about why in just a moment. It was also a high impact economic day, which we'll get into in a minute. Remember, of course, the unemployment rate and data is coming out later on today. That is going to affect the market. Now, in terms of the two things that we wanted to have a look at, one is the reset of the sentiment. Let's actually go to that over there. We've seen a reset in the sentiment. That is a 50 read now on the fear and greed index, what was previously situated in extreme greed. And the other thing that I want to have a look at is, of course, this chart over here, which is your yearly open. Now, the reason I want to highlight this is because sometimes what you typically see is you can see a sweep of the yearly open. This is what typically happens in these bull runs, right? Is often you can start off the year, there's your 1st of January mark, which is where Bitcoin was trading at $42,000. And what happened to Bitcoin following that was, following the 42,000 over the coming days and weeks, it dropped yet again another 8 to 9%, putting in that low at about, that came in at $38,500. And then what happened following that is, towards the end of January, that was your third week, the 23rd of January, it put in that low, and pretty much it just continued to rip towards the upside, and it rallied very, very aggressively all the way into March. That was about 3 months. Now, I am looking for something possibly similar to this to happen, right? If we do look at the yearly open, there it is. We have it marked off on the chart, and you can do this across the board. So watch for those lower support levels. It may already have done it, right? That could be the deviation. For all you know, we'll change this onto 2 points. That could be the deviation that you've seen over there. You may get it up like this and then straight continuation. But we did warn of this once you had the bearish engulfing candle on the daily. That was your warning sign. If you do continue lower, you're still looking for the same thing, right? Maybe you go down to 85K, and then when you reclaim and you start to hold the yearly open, that opens up the opportunity to go for the long trades with stop losses. So it would be entry over here in the circled area, stop loss where the X is over there, and then you can continue to trade this towards the upside. And as mentioned, that would be the final entry that I would personally look at for this bull run. So we can see what the other charts look like in terms of sweeping the yearly opens. There's ETH, right? Yearly open came in at least $3,333. So basically, you're watching to see if ETH can sweep back up, gain acceptance above the yearly open, and that creates the long opportunity, right? If you look at Solana's already swept the yearly open, is now reclaiming into that yearly open, but it's too soon to say, right? It's too soon to say whether we're going to get continuation and acceptance. There's Phantom's yearly open. currently trying to reclaim it. You have NIR's already swept the yearly open, but again, you could go lower. You could see something like that. So do pay attention to that. Mark it off on your chart. Have a look at whatever various coins you are trading out there, and check where the yearly open is and when you start to reclaim that yearly open. So the two things we're looking at is a reclaim of the yearly open, a reset in the fear and greed index. There is a more objective measure that you can look at when trying to study that fear and greed index, and that is, of course, going to be the funding rate, right? This shows you the at least discrepancy between the futures price action. So remember, there's futures contracts that you can look at in trading. You can look at the contract dates for we're in January now. That would be the spot price. Then you can look at the February contracts, which is going to be the futures price 1 month outdated. And then you can look at March, April, May, June, July, etc. I think it goes out to about 6 months forward. And it shows you how optimistic or pessimistic the market is in terms of what the futures price is, and the funding rate and the rate at which people are paying, the premium that people are paying to keep these futures contracts open, is often an indication of how much fear or greed there is within the market. So because this fear and greed index sometimes to me is a little bit skeptical, and I'm not always entirely sure how accurate it is. This one's giving you a 50 read. We can look at other ones like this, right? This is showing you that the market is actually in panic, and that seems more accurate to me. I do believe that the market does seem more fearful to me right now than neutral, right? Let me know if you agree. Go and actually vote in the poll. There is a poll that you can vote on. Maybe that's just me, but it seems to me that the readers, that people are more in a panic state, right? They're beyond uncertainty. Uncertainty was last week, I think. Panic is more about right now. We're not in capitulation quite yet, but probably somewhere around panic, right? And a lot of this has, of course, been stirred up around the speculation of the Department of Justice liquidating over $6 billion worth of Bitcoin, which we did cover yesterday, right? We spoke about that yesterday, and we said that it would probably be very, very quickly absorbed when you look at how the inflows came in over the last couple of months. Other chart that we can look at over here is also the aggregate funding rates average, which you can see has come down very, very, very aggressively, right? Right down. We haven't quite hit yet negative funding. This is going to be similar to this, looking at the, the relationship between those funding rates into the futures charts. When you get those big spikes towards the downside, just like I marked off over here, you had COVID, you had the FTX collapse, you had the USDCD peg, and the last big one that we had was the yen cash and carry trade unwind that happened all the way back on the 5th of August. And that is your negative funding in a bull market is a strong buy signal. We haven't seen that yet, but the good news is that the funding rate is not trading all the way up here like in 2021, where we saw the Bitcoin cycle top occur. And this is why I think that the probability of a cycle top is very, very low. In actual fact, I let the well members know earlier this morning, as well as last week when there was a little bit of uncertainty around the crypto markets, that it's my personal belief, based on all the data and things that I look at, that you're looking at about a 1 to 3% chance. I could almost push it to a 0% chance, but that would be unwise as a trader or investor, because we know there's never a 0% chance of something happening within the market. So I'm giving a 1 to 3% probability that this bull run is over, right? 1 to 3%. Very, very, very low odds. We saw yesterday a lot of people coming out, big names on crypto Twitter, also known as X, of course, who are calling for the end of the cycle, even giving odds of 70, 80, 90% chance that it's all over, right? I don't subscribe to that camp, but it is going to be highly affected based on what the data comes out later on today. We do, of course, have the unemployment rate, where previous unemployment rate was 4.2%, and it's forecasted to be 4.2% again. So we'll see what it comes out later on today. That is, at least in my time, I'm in the UAE, 5:30, right? 5:30. So that is approximately 6 hours away, right? About 6 hours away, we should get that data, and that should initiate the next move. So remember, we're in an environment where good news is bad news, right? I know that might be confusing, so I broke it down a little bit for you guys based on what I dropped in the Whale Room Discord earlier on this morning. If the data comes in below 4.2%, then you can expect that Bitcoin likely puts in a higher low reclaiming the yearly open, and that would be the big reset that the market needed. And then you slowly continue towards the upside, right? So that's if it's below 4.2%. If it comes in at 4.2 to 4.3%, then I said the chances are you're probably going to just be range bound, where you're looking still for that range low support. I've identified the trading range between $85,000, which is where that 0.382 fib level is on the daily time frame, and $110,000 as your range high. That is where the market is going to oscillate, probably between 85 and 110,000 over the coming months, right? This is not necessarily a death sentence for altcoins, because in a ranging environment for Bitcoin, you may actually see that chop and drop of the at least Bitcoin dominance, which allows for some of the altcoins to catch a bid, right? Especially when you line up the seasonality. Now, that's a key point. If it weren't for the seasonality of where Bitcoin is cyclically within the cycle, which would suggest that we still have, the majority of this year to go for the rest of the bull run, if it weren't for that, I would be panicking, right? I'd be very, very, very concerned with the current price action that we've been putting in. But seasonality suggests that we still have good times ahead for us, especially when it comes to the altcoin sector, which is still yet to see a proper bull run. If the unemployment rate comes in above 4.3%, then expect the correction to continue, at which point we're looking all the way down to those lower levels, which I identified on the daily time frame. You'd be looking at the possibility of $78,000, possibly even below that into, the lowest, let's just call it the low 70s, around 73K is going to be your 200 MA. And we've seen previously how we have actually swept below those levels and then later on reclaimed, right? So these are things that we need to look out for. I said, in the short term, yes, crypto does seem like it's in trouble, especially if we remain below the yearly open and test that as resistance. That will not be a good sign. But again, the odds of the bull market being over, I'm giving a 1 to 3% chance. So we can look at the total 3 chart, which is really a great risk index, right? To look at where the risk is in the market. Why? Because this denotes it refers to the altcoin sector, and it's been range bound, right? Remember, we came all the way up to these same levels back in November of 2021. We came there, now tested that level. So you're kind of putting in your little double top scenario over there. But if the cycles repeat, every cycle, the altcoin market becomes bigger and bigger. And therefore, we do expect rapid expansion beyond this point. Now, let's go back to the weekly time frame or the monthly time frame, which is this chart over here, where I just told you, what did I just tell you? I just said that I personally cannot really recommend to anybody to get into the market, after this high low. So if you do put in the high low and it comes in at 85, 83, 78, wherever it comes into that zone over there, that presents the final buying opportunity, because once this expands beyond this point, what are you going to see on the total cryptocurrency market? Well, you're also going to see an expansion beyond this point, at which point it does move into price discovery. And when you start to move into price discovery on total 3 for the altcoin sector, we know that it is the beginning of the end, right? A lot of good things can happen over those coming weeks and months with massive pumps. But typically what we see is that these moves occur very, 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 very quickly, right? We can actually look at it on the chart over here, and you can actually have a look at when the expansion does take place. That happened over 63 days. 63 days is not a very, very long period of time. This one was a little bit longer, and you kind of had 2 tops. So the first one over there happened over 112 days. And then the second one, following the massive sell-off over there, was completed in about 119 days. So when you start to break into price discovery and you take out those highs, well, it's going to happen very, very quickly, right? If you look at this over here, this is the point where you took out those highs. So you had your first top, which occurred 77 days later. And then from the taking out of the highs to the ultimate top, it was 266 days left to go. And we haven't yet taken out the highs, right? What's interesting about that is I still have my little clock, right? I still have the clock. Nothing's been changed on this. My clock says 270 days left to go. That is the timing cycle that I'm currently following. And I've been saying for a long time, I believe, October, November is the most likely time for when the cycle would end. But we do need to manage our risk along the way. We need to protect our capital along the way. And you can never be like an ostrich with your head in the sand, pretending that things are not going down if they are going down, and you could end up losing money. So it's an important level that price is currently at, especially since we broke that stop and reversal indicator. We're still above all the other key factors, but we need to see the all-important volume tick back up. We've been speaking about the volume for a long time, and we are starting to see this roll back up slowly. Now, what you do not want to see is this turn into a lower high and reject from the underside resistance over here, which is going to be just below $100 billion market cap, right? So hopefully this was a big shakeout. Hopefully you get the manipulation just going back into this chart over here. Remember, when it comes to trading, there is something labeled as the power of three. You're welcome to Google it, but what the power of three suggests is that you often have this reaccumulation phase followed by a manipulation phase, which would be a sweep below the yearly open again. It can come lower down to about that 85K level, which would be over there. And then following that long-term reaccumulation, manipulation, you reclaim back the yearly open or the trading range, and then you go into expansion, right? And again, just to showcase it to you over here, we can go back to this chart. That is essentially what happened over here. You had your reaccumulation, there it was, reaccumulation, you had your manipulation down into this low region, and then after that, you had your rapid expansion up, right? So you could be looking out for something similar to that. This may be the final trap scenario, right? Watch for the reclaim of the yearly open to be sure that you are about to mark up and get the next major move over there. All right, going on to we've covered that. We've had a reset as well. If this is a manipulation phase, as I've just showcased, you've done that manipulation phase into the high time frame charts with a reset in the volatility. You can see BBWP is fully reset, come all the way back down to the lows. Top side over there, we have the stochastic RSI also all the way coming back down. Now, these tools are not to be used in isolation. You'll get heavily wrecked, right? You need to know what you're doing when it comes to this information. So we are using this in combination and as confluence with the rest of our analysis. And the confluence suggests if you're coming into key support with volatility reset, with a momentum oscillator reset, and you're playing out the potential PO3, power of three, that opens up a trade opportunity, right? So we're looking at that. We'll keep an eye out on that as it unfolds. Dailies, we've covered over here. The only thing that I haven't mentioned to you in today's show is if you do get back above $95,877, that is where the RSI starts to trend back up and bulls take control. To be very, very clear, in the short term right now, bears are fully in control, right? Bears are in control. Do not mistake in that. But as the pendulum shifts, which we spoke about a little bit yesterday, the pendulum tends to shift, right? Sometimes bears are in favor, and then the pendulum shifts and bulls take control. And then bears take control and bulls take control. And so the pendulum shifts. And that pendulum should shift again in a couple of days' time, sometime around Tuesday, when you do print your next bull moon. The pendulum from some point next week should shift back into the bulls' favor, and then bulls will have the opportunity to start to reclaim. Now, as we wait for that pendulum to shift, remember this chart. Remember the sweep of the yearly open if we do end up going a little bit lower, and then the reclaim of that yearly open, that is the end of the manipulation phase, right? Okay, other things to look at over here, of course, we spoke about the possibility of whether this was a trading range. So here's the trading range. We spoke about this over this entire week. We said, is this a trading range or is this a higher low that you're looking for over here? And we said, based on the statistics, the chances are much higher that this is not going to be a higher low, but instead it's a trading range, and you're going to be coming all the way back down to the bottom of the trading range. And as you can see, that's exactly what we got, right? You came to the bottom of the trading range, and we correlated that with the inverse chart of this, which is the USDT dominance, which came to the top of its trading range and failed, right? As you can see over there, it has rejected. Lucky you, lucky me, lucky bulls, right? You want to see this chart reject. You want this chart to come down over here. If USDT breaks out of this range over here, that would start to look like a massive Wyckoff accumulation schematic, and that would be very, very bad for the bulls. It would mean that bears continue to take control on the high time frames as well. So continue to observe this, continue to watch this. This is something important to be focused on. There it is. We are bouncing now, but you now have the moving average cluster over here between the 50 and 200, which is going to be resistant. So I wouldn't get too excited on this move up over here. Very, very high likelihood. And this will also better showcase that manipulation phase or the reaccumulation and manipulation phase on the low time frame. So if you do end up getting that, remember there could still be another leg down to about $85,000 as your first area of interest or your first support. And that would look something like this, right? Possible bounce into these moving averages at about 96K today, and then maybe over the course of the weekend, even lower volume, drop down, reclaim into, sometime next week, reclaim the trading range, and that's the end of the manipulation phase, reclaim the yearly open, and off you go for the expansion, right? That is a possibility. That's something that I'm watching for over there. You can only hit a range low so many times before the bottom falls out. And you've now hit this level once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. There's no way it's going to hold. Just to be clear, guys, there is no way. I would be willing to say with 99% odds, if you put in a lower high over here, the next test of this 91K level is going to break. And then you're going down to 85K. Bears are in control, right? Keep that in mind right now in the short term. Okay, the Bitcoin dominance. Here's your Bitcoin dominance. We don't want acceptance to be gained above the mid-range. There's the pink line. Go back to yesterday's show or the day before we did cover this. We want to see the deviation over there. We'll keep an eye out on that. Okay, we can look at some of the altcoins. So altcoins, many have been hit very, very hard, right? I see many of you are saying, why is Rune crashing? I don't know why Rune is crashing, but I know that we did say it's probably coming down to $3. Where is it now? It is at $3.20, right? There it is, right? So coming back down into key support. There is Rune hitting that key level. Look, Rune never back tested all the way into this zone. I don't necessarily think it's going to get that bad, but level to level, if you do end up gaining acceptance below there, just below $2, 199 is your next major area of support. Okay, so that is for Rune. Let's go back. Solana, let's look at some of the majors over here. Obviously putting in a little bit of a bounce, but in terms of the daily, this doesn't look like much of a reversal to me. If Bitcoin drops to that 77 to 85K level, expect Solana's coming to 160, right? It does have the opportunity, though, if there is a miraculous recovery that starts to come into play right now, then theoretically, this would be a high low. But we've spoken about the trends, right? High highs and high lows versus a ranging market. And we said the chances are much higher that this is a ranging market than a trending market. And if this is a ranging market, then your next range level is coming in at 160 for Solana. And that's coming from somebody that's holding Solana, right? So there is no biasness over here. This is your 50% level. Personally, I'd prefer to see it hold above this and maintain this upsloping structure. But what I just say, when you test a certain level too many times, it is inevitably going to break. You've tested it once, twice, 3 times, 4 times. Give it, let's call it 5 times, 6, 7. This is your 7th attempt, right? 7 attempts into a trend line, it's not good. Phantom, this was the move that we drew out ahead of time. You've had the move down. Same thing, probably a little bit of a dead cat bounce, relief rally, and then maybe over the course of the weekend, drop it back down to about 55 cents. That's going to be the major level. So if you're looking to fill your bags on Phantom, remember, Phantom is upgrading into Sonic, and you'll be able to swap the Phantom tokens out for Sonic. So if you do end up hitting this level at about 55 cents, probably a decent buy. Good zone to get in over there, and then you can convert those into Sonic, right? You can swap them out. All right. What else have we got? There is also, let's see what 𝗓 looks like over there. So 𝗓 also breaking its trend line. Let's see. We have to redraw some of this. That's not good that it's breaking that. I'm going to clean some of this up. Let's just clean that up, and let's just mark out some of these range levels over here. Okay, so in terms of your fibs, you've already rejected from your 50% level, which is not good. The predominant range that I'm focusing on is this one over here. And you're just below that 50% level now. I'll just throw it in over there. There's your midline, right? There's your midline over there, 39. So if you take from the entire range over there, you've already rejected from the 50% level. But if you're focusing on the at least the main key levels that I'm looking at, which are these, that is your midline. So you want to see this reclaim as soon as possible over there. 𝗠𝗢, let's have a look at 𝗠𝗢, because 𝗠𝗢 has been one of the strongest. Still good, right? Really good. High highs, high lows. We spoke about this possibly holding as a high high and high low. We said, some of the coins are still trending. This is in a strong trend. So this has been a beautiful uptrend of high highs and high lows. It is holding. I do want to mention something as well for anyone that's a builder out there and involved with 𝗠𝗢. There is 𝗠𝗢 Hub's Global Accelerator program, which is currently going on. You can see over here, applications, are currently open, but they pretty much closing today. So it's kind of your last chance to get in, and the program starts on the 25th. You have access to potentially $200,000 worth of funding, right? So as a buzzing ecosystem, if you are a builder and you want to get the support of 𝗬𝗓, specifically for multi-chain builders, go and have a look. There's a link in the description below that will take you through to that page. There it is, to the 𝗬𝗓 hub. And then hopefully you can get some funding over there. Maybe someone that's building, right? A lot of different people watch the show. It's not only us traders and retail. Okay, let's see. What else have we got over here? Let's go through to some of the meme coins, right? I know some of the memes have absolutely been slaughtered, so we should probably have a look at those. How's FOG doing? Okay, so distributing, that's not looking good. You do have major support coming down at 10 cents over there. Let's see how Foxy is doing. Also, losing that cup and handle, right? It's not over for the cup, right? You could still make a little bit of an argument that if it does bounce from here, there is still the possibility of the cup and handle formation forming. Otherwise, your range low support on Foxy is 0.0074. Okay, 𝗕𝗬𝗕𝗬𝗕𝗓 all the way down. This is 𝗕𝗬𝗕𝗓 coin, so not the 𝗕𝗬𝗕𝗓 that's on mainstream exchanges, but 𝗕𝗬𝗕𝗓 coin is all the way down at range lows. If you ever wanted to get exposure, that's probably the best opportunity that you're going to get. Okay, SPX, heavy pump, followed by a massive dump, almost came back down to range lows. I do actually believe that this will hit this key level. I don't think they're going to be able to defend that. I do think this will probably give up those gains and will come down into about, 90, just below 92 cents. It'll probably sweep that level, and then you can reassess. So something like this, or probably give that up. You're going to probably see something like that. And then hopefully you get a big move up after that. Okay, buttholes up 33%. You got to love it, right? 33%. You're all rich again. No, I'm just kidding, guys. This thing got nuked, right? We spoke about it actually yesterday on the lower time frames. I said that is your key support, right? And you can see you hit it. So 75% down, straight into the key support. You started to get a bit of a move, but to tell the truth, it's probably a little bit of a relief rally, which is going to be given up, right? Okay, PopCat, I know, has been absolutely slaughtered here as well. So there it is, PopCat, maybe finding a bit of a bottom coming into this range level over here. You can see there is historical support within the zone. Let me just quickly draw this out a little bit over here. So if we just line that up over there, you can see prior resistance flipped into support. So this is a key level and a major bounce zone for PopCat. Okay, CAT, this is Simon's CAT. Range lows are coming in a little bit lower. I'm not going to read the number out. It's really long, but 13% more down to hit that key level. It is probably going to hit that level. How's Bonk doing? Okay, Bonk also deviated the top of the trading range, basically came back into the mid-range over there. If you focus on your predominant trading range, which would be this, you can see you're situated pretty much right at that midline. What else have we got? Let's see, anything else? Let's see, WIF. How's WIF doing? Okay, WIF has hit the level, right? We marked this level of ages ago. You've officially hit that level. Now you need to look for the sweep of that zone. I think maybe we'll go into this chart over here and just check where that yearly open is. So WIF USDT, let's see where that yearly open is on WIF. There it is, right? So yearly open, watch for the reclaim of the yearly open. If you reclaim that yearly open, it should line up nicely with this chart that we've marked off over here. Sweep below, reclaim the yearly open. Possibly that becomes the trade opportunity. Okay, what else? What else have we got over here? Let's just see. Brett, right? I know Brett has come down a little bit. I looked at it this morning. So also all the way back down to mid-range, deviated the top of the range highs over there. Where is Brett on this chart? Let's quickly pull it up over there. Brett USDT. How is the yearly open? Where's the yearly open on Brett? Okay, Brett's still actually above its yearly open. So Brett's above the yearly open, but it's got a lot of work to do. What about 𝗕𝗬𝗕𝗓? Okay, 𝗕𝗬𝗕𝗓 narrowly holding on. Where's 𝗕𝗬𝗕𝗓's yearly open over here? Let's see. Here's 𝗕𝗬𝗕𝗓. Quickly, way below the yearly open, right? 𝗕𝗬𝗕𝗓 is way below the yearly open. Also, a lot of work to do right around where that breakdown point was, 19.96 for 𝗕𝗬𝗕𝗓 to reclaim. So you definitely don't want to see 𝗕𝗬𝗕𝗓 drop this level. If 𝗕𝗬𝗕𝗓 drops this level, there's a big move down to the next major support. It's probably going to give up this entire pump over here, which means a move down to about 12.04 for 𝗕𝗬𝗕𝗓. Okay, there's a query around MOG. Let's go to MOG on both charts over here to just correlate. So MOG sweeps the yearly open, starting to reclaim. This chart looks a lot healthier than the others. So yeah, I mean, I need to clean this up a little bit over here, but this was your range high, right? This was your range high. A little bit sloppy. If it does distribute, expect that your next major support is going to be about 1374, right? So I'd be looking down to this region over here. There it is. That's going to be your next major support for MOG if you don't reclaim that level soon. All right, let's see. What else, guys? Let me know. I know a lot of you want Fartcoin. I don't think I've ever received this many requests on Fartcoin. Did we not just do that, though? I'm pretty sure we just did Fartcoin. Wasn't up here. Oh, we did Butthole. That's correct. We did Butthole, not Fartcoin. Okay, let's go to Fartcoin. So Fartcoin USDT. Let's get it. There it is. Okay, Fartcoin. Yeah, it looks okay. We can go on some of the lower time frames. On the 4 hour, though, it has created a new swing low. So you have to be careful that this thing doesn't start to distribute. You know, I mean, right over there, pretty much that's the exact level. It needs to bounce from here now. But the question is, does it start to put in a lower high? If it does, you know, I would expect the lower high to come in over there, 101, right? 101. Just watch for that. It doesn't put in a lower high over there. If you up a lot on this trade, I guess you could consider taking some profits as it hits this level. If you're wrong, it's fine. It needs to take out that breakdown point, which was at $1.13. So if it gets above there, you'll probably still get back in at break even on the next pullback. So it becomes less risk for you, right? Less risk for you. But in terms of the chart here, daily looks okay. 4 hour has created a new swing low. Daily also marginally holding up with those high lows, right? Marginally holding up with high lows. All right. Okay, what is my take on sell in May? That's a question from Gary Cohen. My take on sell in May is that, you know, the market is front running everything. It is still, if you get a miraculous rebound now and you start to rally up, let's go back to the yearly chart over here with the yearly open. Let's go back to this. So this is my take. If you do play something out similar to what we saw at the start of last year, which was, of course, the accumulation, opened the year up, immediately dumped, manipulation phase, which is this, right? And you reclaim. If we do something like this and you see price ripping towards the upside into March, I would personally exit pretty much absolutely everything. And then I think that you play something similar out, right? Then you do get a sell in May and go away. You get something like this, which would probably start getting priced in already, you know, down into May, June, July, and same thing, start to reaccumulate, and then maybe you run it up one more time. That's my take. But it is possible that as well, you know, if we don't get the manipulation phase and reclaim the yearly open, but instead we test it as resistance now and we continue to mark down, then it's possible that sell in May and go away has actually come early this season, and you're going to go in for a long correction all the way into March and then reaccumulate through March, April, May, and then start to mark up for the rest of the year. So that's what we're looking at, right? That's all that we can comment on that. It's a game of probabilities. We just have to take things one step at a time. As I've said, short term, the bears are in control. High time frame, the bulls still have a little bit of opportunity based on the various earlier factors that we spoke about, like being above the 21 exponential moving average, you know, as well as the fair value gap that's on the monthly time frame. So those are some of the key things. There is things that there are coins, right? There's coins that are doing very, very well out there. I made a tweet about this morning, and I said I'm absolutely utterly surprised. The best performing coin that I've probably had for the last couple of months is Goku. It is literally, guys, $19 million market cap. We got into this coin sub $1 million, right? These trades are dropped ahead of time, right? Remember, we dropped these ahead of time in the Whale Room Discord. If you go through to the Whale Room Discord, this was dropped in the DGen calls section, you know, a really long time ago. I don't know, when did we drop this trade? Goku, where's Goku in here? I don't even know where I dropped this trade, but it was ages ago. I'd have to scroll. Here we go. 15th of November. So 15th of November was, you know, over here. There it is. We dropped this trade down here. I can give you the market cap of 15th of November. When we started to drop Goku in there, that was, sub $1 million market cap, $840,000 market cap, now trading at 20 million. Imagine what this thing is going to do when it gets mainstream listings, right? It's been listed now on WeX, a couple of other exchanges, but if it starts to get onto like, you know, Bybit, Bitget, etc. It's going to do phenomenally well. By the way, speaking of Bybit, if any of you don't have an exchange link, you don't have an exchange to trade on, there is a link below. They're giving you up to $30,000 worth of sign-up bonuses, right? So use that specific link below. That is, catering towards at least the followers of this show. Okay, also, I want to talk about Tesla, stock market stuff. So Tesla obviously pulling back into a key level over here. You might see a little bit of a bounce, but I spoke about this with the Whale Room Live members yesterday. That is on the Discord. We had our live Zoom session yesterday, and what I was saying to them is that my golden case, the best case scenario, would be to see a deviation of Bitcoin away from the stock market. Maybe the stock market puts in a bit of a correction, and you actually see Tesla drop down into these lower regions, right? Because there is a CME gap that's coming all the way down here. And if you do see a move down into that region like that, I would sell a lot of my crypto in March if it plays out the way that I want it to, and probably move a lot of that into Tesla if you get this. But there's no guarantee that you're going to get this. At the end of the day, this is a range breakout. So let's go on the weekly time frame. Okay, excuse me, it's not a CME gap. It was a fair value gap that's coming into this region over here. So that's situated at about $290 for Tesla. Now, I'm not advocating that it's going to go there, because for all we know, you might find support at the range high and then continue to mark up. But I've seen this story many times before. Right at the point where breakout traders get very excited, you oftentimes will deviate, right? If you do that deviation, remember, this has been a face-melting move for Tesla. If you do get that deviation and you want to de-risk some of your crypto into something else that's uncorrelated, I think this will be a phenomenal buy. This will be a golden buy. I'll definitely be going in over there under the presumption that crypto goes up and this comes down, right? Which we don't know. So it needs to be a little bit of a deviation between the two. All right. What else? What else have we got, guys? Let me know in the comment section. MicroStrategy. Yes, let's have a look at MicroStrategy. Actually, I do have it here. I think that is an important one to be following. So here's your weekly chart. Weekly chart looks a little bit cooked. Let's just see. I wouldn't want to see it come all the way down here to 184, because that would be bad things for Bitcoin. But let's just see some of these key zones over here. I mean, it is looking like that was the complacency bounce. And the technicals at least are telling me that unfortunately, the MicroStrategy might actually just bleed out all the way down into the zone. So that's what the TA suggests. You've created a new swing low, you've created lower highs. What else can I say, right? The charts don't lie. That's the truth of the matter. Maybe you find a little bit of support over here at these lows, which would be pretty much a drop down to about 245. So that would still be brutal, right? Let's see, that's about another 30%. Hitting all the way back down into that range breakout level is $184, around 45% from current prices. So we can chat more about this in Whale Room. Remember, go through to the link in the description below. Whale Room is listed over here if you do want to join. There it is. Whale Room's over there. Also, there is Whale School if you do want to join up in the trading school. We are taking signups right now. You have 19 days left to join, right? 19 days. This is free. This is completely free. Learn to trade like a whale in just 10 days. That's it from me, folks. I will see you all on the next one, which might be tomorrow. We'll see how the market goes. I'll catch all of you then. Have an absolutely lovely day, and cheers for now.